And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. Last week I was at the Money Show and I missed speaking with you guys, but we are on it here today. Let's take a look at these broader markets. Lots of volatility still lingering in the air. Some of the data last week showed that the economy is improving. That was earlier in the week with the services PMI showing an expansion in July. ISM report also showed that the economy is still growing, but it was not enough to convince investors. It was not until today that we got employment data for the week, and the weekly jobless claims fell and dropped from a one-year high, and that did in fact boost the markets quite a little bit yesterday. We'll get into all of that. And then also of note is we do have some very key data coming up next week. We have that core CPI and PPI data. That is inflation numbers that are very closely watched. So we could see that volatility continuing depending on those results. We also get retail sales next week, and industrial production numbers are due. Walmart will be coming out with their earnings, so no rest for the weary. Let's go ahead and take a look at these markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500, and we were generally flat for the week. You can see this is where we closed last week, so we're in par with that. And let's take a look at some of these momentum indicators. That RSI is trending upward. Good news there. However, we are still in negative territory below that net neutral. We also have a MACD that it's in negative territory heading upward. What I've done here is marked up those characteristics of a downtrend reversal, what we will need to see to convince us that the S&P 500 is now in an uptrend. So we are not quite there yet. We need only look back to this late July period to see that we've had head fakes here in the past. So you will want to get that confirmation. Subscribers to my MEM Edge report are aware of that and will be alerted immediately. But for now, we are still on the prowl for more constructive price action before turning bullish. Also, we need to take a look, of course, at the Nasdaq, which has gotten hit quite a bit harder. This is a daily price chart. You can see last week we rallied right up to this key downward trending 10-day simple moving average. We are not close as far as getting that RSI into positive territory, getting that MACD crossover heading north. So we certainly have work to do, which makes perfect sense when you get a drop of this severity that we've seen here with this correction in the month of July into the beginning of August. It will take time. That's a very natural progression. Does not mean that you should not start putting your watch list together. I'm going to share with you some of the names that are hitting my watch list, and namely, they will be stocks that are withstanding the downward pressure taking elsewhere. They have strong fundamentals and the charts are looking constructive. Oftentimes after a drop, the broader markets of this significance, you will see those market leaders, once the markets turn, are going to be the ones that held up well and outperformed in general. Let's go ahead and take a look at a different view of the Nasdaq Composite. And what we are looking at here is, I'm going to go ahead and pull up a weekly chart for reference. And this is your key 40-week moving average. 200-day moving average on the daily is a 40-week on the weekly. And a couple of items of note. If we go back to this 2022 bear period, for instance, on the weekly, that negative RSI with the close below that 40-week certainly was a signal of further downside ahead. We also had a negative MACD. So you want to have that backdrop in your mind as you look at where we are currently. You can see that the RSI is still in positive territory on that weekly chart. And hard to tell here, but we closed just above that key 200-day simple moving average, and we still have a MACD up here in positive territory. Also of note, we did have a 1-week close back here toward the end of last year below that 200-day simple moving average. We also had a negative RSI. However, that MACD stayed up here in positive territory, and we were able at that point in time to recover. This was all about Powell comments that had investors on the lookout for interest rates to drop, which helped propel the markets higher. So from here, let's go ahead and take a look at the underlying market. You want to have a really good sense within those 11 sectors of the S&P 500 as far as what's working and what's not. So we have a 2-month daily price chart view. I've added that relative strength indicator and sorted it in descending order. So up here at the forefront are your stronger areas, very similar to what we've been seeing over the last 2+ weeks. Defensive areas up here at the forefront, utilities, REITs, staples, and healthcare. Among these, I will share with you my favorite and a couple of stocks from that group as we move through here. But also of note is the fact that communication services, definitely known as a growthier area, it is filled with internet-related stocks. And take a look, we are now back above that 50-day moving average, RSI dipping into positive territory, and a MACD crossover. I will share with you why we are seeing vibrancy in this area, because I think it is very notable. Also, taking a look as we move through, you will want to be aware of those weaker areas, and no surprise here. Technology, after having a drop below 10% in a correction mode, it did experience a little bit of a rally this week, but we do still have negative momentum indicators with that RSI and that MACD in negative territory. Taking a look also at some of these weaker areas, the consumer discretionary, and we can see this significant drop, very similar to technology, and a rally similar to that. But in this case, we are still below this key 200-day simple moving average. And then we have that RSI and MACD in negative territory as well. So again, the damage and the severe sell-off is not going to right itself overnight. In essence, it will take time. I mentioned Walmart is going to be reporting next week. We get retail sales. So we will, of course, keep an eye on the potential downtrend reversal. Ideally, we want to get these growth stocks back into favor. So let's go ahead from here beyond the sectors and take a look at these sub-industry groupings in the market. Same view here with a 2-month chart. RSI leading with the stronger areas up here at the forefront, and a lot of messiness here in these sub-industry groupings. And of note, up at the forefront here is volatility. Now, you can see we are certainly off of this tremendous peak that we experienced last week, but we are still above that 20 level. And in essence, anything above 20 is still viewed as elevated. So volatility is still lingering as a backdrop. For any of you that watch the markets closely, you'll know that we do remain in a generally choppy period here in the markets. Also up here at the forefront, IHI, and I will tell you, I have spent a good part of this week screening, looking for those names that are outperforming the broader markets in an eye toward the fact that they could outperform when the market pressures are reduced and gone. And we can see IHI did have a number of candidates in this grouping. They are going to be names that are innovative. They have that growth in place, and they do have a nice growth outlook going forward. That's going to be a key component of course. Also up here, IBB, now it is in negative territory here with that RSI, not quite in positive territory, but of note, this is viewed as a proxy for appetite for riskier areas. These biotechs, many of them do not have earnings, but it's in line with that move into healthcare that has been quite healthy, pun intended. Also up here at the forefront, IGV, and I'll share with you where in this software group we are seeing vibrancy. The good news is that it is generally earnings driven. So we'll get into that as we move forward, on the cusp of turning positive here. And as you can see, downtrend reversals in this group can be really nice, but they also can be quite volatile. So you will want to have a good handle on what's moving that group and why. Also, as we move through, let's take a look at home builders, which really fare well in a declining interest rate environment. You can see it's been waffling this week as interest rates are on the rise. Let's go ahead and take a look at that yield on the 10-year Treasury over at the far right side, that weakest area. And you can see that we ended at 3.9. So we are approaching that 4% level on that yield on the 10-year, not particularly constructive. And it has impacted interest rate sensitive areas such as those home builders. So from here, let's go ahead and take a look at one other way. There are several ways that as an investor, you can really get your arms around what is moving. You'll want to access and understand why. And the purpose here is to really see why particular names are outperforming, but also you're on the lookout for group movement. Oftentimes, these stocks move in tandem with their peers, and it could be an overarching reason. So we will take a look at that right now, because one of the easiest ways is take a look at the market movers on a daily basis. And what we can see here, the S&P 500 was up about 0.5% today, but take a look at these big movers in the S&P on the daily. Now from here, we'll pull up that daily chart because not every chart is going to look attractive. But first up here, we have Akamai, AKAM, gapping up, huge volume, turning positive. However, we do still have possible resistance here. But of note, it is a software company and it was earnings driven. Let's take a look at another software company, Palo Alto. Many of you may remember this stock. It was and still is highly regarded for their software security. However, they had a falling out here due to a change in their structure, corporate structure. But let's take a look at this really sharp advance here from this 280 level up to 131, and significant move because we now have a positive RSI. We have that MACD poised for black line up through the red. The company is due to report their earnings, I believe, next week. But more importantly is the fact that we are seeing vibrancy in other software security stocks. This is Fortinet, FTNT. Here's a move from earlier this week on Wednesday, a gap up, not quite a base breakout, but still very significant high volume bullish metrics on that momentum. And we are seeing other software security stocks on the move higher. And one other area also that I did want to highlight. So in essence, we are seeing a nice move in some of these software stocks. I did talk about healthcare and Eli Lilly. This is at the top of my watch list because the company had this downtrend reversal, gap up on very strong earnings. They're seeing great growth, not only for their weight loss drug, but also their diabetic drugs. And we can see the stock is now in a bullish position, both technically and fundamentally as well. So keeping a very close eye on that. This had been a big winner for us with my MEM Edge report. However, when it broke support, we did remove the stock from the suggested holdings list. Super well-run company and worth being aware of. As we move through, also we can take a look because not all of these names are going to look constructive. This is a software name that's in the gaming space, TTWO, and we can see that it did have a gap up today, but just an awful lot of negative by way of downward trending moving averages, negative RSI, negative MACD, so not of as much interest, but again, an exercise that you can on any given day get a really good sense of what is working and why. Here's Expedia, EXPE, another name that had a big gap up 10% today, but we are finding resistance at that 200-day. Positive momentum here, but it is in line with other travel-related stocks, the cruise ships again this week, because it has been deemed that consumers are still spending on travel rather selectively, but it's enough to keep those stocks on the move higher. So from here, let's go ahead and take a look at these magnificent 7 stocks. It is an area that, of course, has gotten hit, but you will want to stay on top of this because these, at the end of the day, are certainly your mega cap names that are driving those broader market indexes, but also for the most part, they are exhibiting, some of these companies exhibiting growth characteristics. And when the markets right themselves, you'll want to make sure you're aware of those stocks that are better positioned to benefit. So this is another company. I put this out in my MEM Edge alert report yesterday, that it is also similar to Eli Lilly at the top of my watch list. This is Meta Platforms. They came out with earnings. Here's that gap up. Pull back with the markets, but it is bucking the downtrend taking place elsewhere within that AI tech-related space. We have this double bottom formation forming the right side of a base, positive RSI and MACD on Meta. Next up is another name that is also on my watch list is Netflix. Not quite as dynamic. We're not getting a lot of high volume, but certainly notable relative to the other M7 stocks. We can see this MACD black line up through the red and on that RSI close to turning positive. And then, of course, you will want to be aware of those laggard names as we move through. And you can see Amazon still continuing to languish. Here's that gap down after earnings, and it has not been able to recover. Take a look at this momentum here with that RSI. Despite being in an oversold position, it really is languishing and not exhibiting any kind of push. Also, likewise with this MACD, we're not close to getting that crossover. So again, exercises to really help you stay on top of what's shaping up in the markets as we head into a economic data and earnings filled week. I did mention that I would share with you a group that is very interesting to me, and it is utility stocks. So first up here, let's take a look at this group chart. This is XLU. Here's that move higher into the end of July and a pullback that took place elsewhere in the broader markets, but the group found support at this upward trending 10-day simple moving average. We have positive momentum here. Also of note, nice high volume characteristics on the rally days. And a number of these companies are coming out with strong earnings. So there are sound reasons for the group to be holding up. I will share a couple of names here with you. First up here is KMI. Now, this is more of a natural gas company. They are the largest source of electricity in the US. And there is now an increased demand for natural gas amid this electric transition line. And we can see this move up above this 21-day simple moving average, positive RSI and MACD. Let's go ahead and pivot over to pure utility electricity plays. And here we are. Southern SO is the ticker symbol. Nice move on earnings. And you can see the stock did hit a near-term high, but has pulled back and really marked time as it digests this significant move for a utility stock. Another name that we can take a look at, and each of these are going to have a strong presence in alternative energy, and that is a critical component as far as clean, cheaper energy sources. Here we are with NextEra and EE. It had this nice base breakout, pulling back very orderly to that upward trending 5-10-day simple moving average. And last up is another name in this same space, Duke Energy, DUK. So I think you can feel what I am seeing here. We will want to make sure that we get this momentum shift that could potentially be shaping up to not cross over. It's not a sell signal, but it's simply indicating that given this sharp advance, and we need only go back to November into January to see that oftentimes these energy utility stocks will have these moves and then potentially take a rest before renewing. Also, you will want to take a look at that weekly chart, and we are a little bit overbought here. So I know I'm kind of negating what I was mentioning to you, but keeping an eye on this area because it is AI related as far as that increased need for electricity. But again, these companies are coming out with good numbers. So there's sound reasons for them to outperform. And that's it for this week. Everyone, have a fantastic week. Go ahead and use that link below to trial my MEM Edge twice weekly report. I do put out alert reports as needed. You will want to stay on top of these markets and also take advantage of the move back into some of these stronger players as the markets firm up. Also, go ahead and hit that like button if you like what you've seen. Any questions or comments are welcome as well. Have a great weekend. See you next Friday.